Hi, this is Paula Martin, and I am here today with Rich Berry from Pride Rock Mortgage. And we were talking earlier and thought that we might want to share some information with you about some strategies to help navigate the market with interest rates being higher, how to reduce your monthly mortgage payment. Some are a little more permanent than others, but today, Rich, we were going to talk about points and we were going to talk about buy downs.
Right.
So when we talk about points, can we just first start with what are the terms of each of those?
Well, when people refer to points, it's slang for discount points, and 1 point, for example, is 1% of the loan amount. So you can pay up to 2 points typically. Not always recommended; it could be a very big cost. But a point, again, 1% of the loan amount can reduce the rate by, say, 3/4 of a point or something like that. It's not a one-for-one trade-off. So 2 points. Not typical, because when the rates will go higher, then the rates will go lower. If you pay 2 points, you may not net back the cost of that 2 points between now and then when you refinance or sell the house. So
okay, so you would use points, and that would be the buyer paying additional money to reduce that
Yes.
interest rate down, and that would be for the length of the mortgage.
yeah, so they would pay, say, a point, and that would increase the closing cost, let's say, by that 1 point. So in other words, if they were going to come to closing with just closing costs and escrow and stuff, they would now come with closing costs, escrow, and 1% of the loan amount.
Okay. Okay, and then of course the other thing would be a buy down,
Yes.
which has been around a long time,
Yep.
but in the past rates have been so low that it really hasn't been necessary to do that. So can you talk a little bit about a buy down? First, kind of what the terms are of it,
Sure.
and then,
Well, the popular buy down, there are 3-2-1 buy downs. There's 2-1 buy down, 1-1 buy down. But we'll stick with, say, the 2-1 buy down. A 2-1 buy down, what happens is, if the note rate, that's the rate of the loan, is, let's say, 7%, then the first year of that buy down, the rate would be 5%. The second year it would be 6%, and then the third year would be the note rate of, in that case, 7%. So you're buying it down. It's temporary, and it gets paid by the seller. So in other words, it would be paid through a seller contribution.
okay, so note rate also meaning interest rate.
Yes, the interest rate of the 30-year fixed loan.
Okay, so that one's a little more temporary, and when you were making your offer, it would say something like the seller to contribute X amount of dollars toward escrows, prepaids, or buy downs, however the words would go on that. And if interest rates went down, which there is some conversation about that happening again, what would happen with all that money that was put aside to do that?
Well, if somebody, let's say somebody was paying $500,000 for a house, and their loan was $400,000, and they did a 2-1 buy down, the cost would be roughly $8,500. So it gets apportioned or prorated. So if somebody refied 6 or 8 months into that 2-year portion, then a portion of that is unused. A portion of that buy down is unused. That will get applied towards their payoff. So when they refinance onto the new loan, their payoff will be of the old loan will be reduced by what's left over of that buy down.
Gotcha. So you can't lose. You're not going to lose that money.
Yep.
It's a strategy that might work with some properties out there. It's not going to work with all of them. It's still a competitive market, and so the could you use gift money from somebody else for that? Like
for the buy down, no.
Yeah, it has to come from the seller.
Seller contribution.
Okay. All right.
I mean, not typically. You could use gift money, say, towards closing costs or something like that, and use a seller contribution towards that buy down or something.
Yep.
So
I know you always have to have a magic hat to keep pulling things out that maybe will work.
Yeah.
So that's just a quick one on these two options that you might consider. If you have more questions, certainly reach out to us at paulamartingroup.com, or so, of course, Rich Berry, which is priderockmortgage.com. Phone numbers are at our website, 603-770-5162, and your number is
603-498-8736.
Stay tuned. We're going to be running some other ones as time goes on. Thanks for watching.